Welcome to Property Showcase, the podcast that brings you closer to the service providers that can inform your decisions about how you buy, manage and research top investment opportunities. Be informed and become a better investor with Property Showcase.
G'day everyone, it's Tom Gilmore, Partnerships Manager for Smart Property Investment, back with another episode of Property Showcase to kick off the year. I've got an interesting gentleman who I've actually asked to come into the office to kick us off. His name's Sam Gordon. He runs a buyer's agency called Australian Property Scout. You may have seen him float around on the Smart Property Investment website, a few articles here and there. You may have also heard him more in particular off the Smart Property Investment Show, especially episode about 4 properties in 4 months. Go check it out if you haven't already. Sam, how you going?
Good, thanks, Tom, mate. How you doing?
Yeah, really well, mate. Now, as far as I'm concerned, I mean, I brought you in here myself because I'm actually looking to buy. And I figured a few other punters out there probably would be looking to buy as well. So it's the beginning of the year, everyone's a bit hot. But you've actually got a bit of a special offer for people. And if you stick around, we'll be hearing a little bit more about that. Is that right?
Yeah, mate. Happy to talk about it.
Brilliant. Well, look, mate, how's things kicking off for you so far? Everything a bit hot?
Yeah, mate. Yeah. Look, the end of the year finished really strong. We saw some really positive signs in the market. It was stock levels tightening up, vacancy rates dropping, like some really, really good activity in a lot of the different markets we're in. Yeah, and look, listen, mate, we've already in kind of 6-month purchases, like from when we purchased things in the last 6 months, we've definitely seen increases in price as well, which is what, a lot of people are happy to see early on.
Mate, that's fantastic. And look, I mean, to give the people what they want almost. Obviously, you do work across Australia. You're based in Sydney, but that doesn't limit you to just Sydney properties itself.
No, definitely not.
What are the areas that you'd be looking, broadly speaking? I know, obviously, you're not gonna give me the
divulge too much
the butter. You're not going to give me the pancake straight away. But what are the hot areas that you're looking at right now? Why should we be following you into battle, into sort of buying with you?
Yeah, definitely. Look, at the moment, we're focusing a lot on some really strong growth areas in both Brisbane and Adelaide. They're the big growth corridors we're kind of targeting at the moment. There's some massive infrastructure projects going in, some really big population growth, just some good statistics in a lot of different areas. They're supporting where we want to put our money. And like, as you know, mate, I put my money where my mouth is. I go out and invest myself in a lot of these areas. And yeah, mate, it's just kind of getting out in those areas, finding where works well, where those growth corridors are. And then we get on the ground and just network with everyone that we can to get access to the best deals that we possibly can. It's also, with this sort of stuff as well, in terms of where you're looking, you want to be able to negotiate really hard as well. So you don't want to go into somewhere where it's already firing and red hot, because it's very, very hard to buy well in those locations. But it's where you can see the uptick, where it's coming, where the stock levels are tightening. And really that just comes down to having your finger on the pulse in those different areas to see where that movement's already happening.
Yeah, definitely. Well, I suppose that sort of separates what you are to me, essentially. Now, I'm certainly no expert, but I'd like to think I know where certain hotspots are happening. But I'm all hands behind my back here. There's not really much I know working every single day, which is why we engage with people like you. But I actually sort of want to expand upon that idea a little bit more. Okay. Working particularly in some of these areas like Adelaide and Brisbane, how do you know? How do you, obviously you must be looking at core logic data, vacancy rates, the demand of things coming through, or is there high or is there low demand? There's so many different factors. I mean, what actually determines, a good investment purchase for your clients? Yeah,
look, in terms of where we look to invest, firstly, we kind of go on a macro level. We kind of look on a macro level, where adds up, where stacks up, where there is room for growth in those sorts of areas, sustained growth over a longer period. And then what we do is once we found those areas, we like to kind of drill down from that point and really research the infrastructure projects that we find, make sure they've got, that long-term potential where they're going to produce jobs and bring people to the area in a big way. And then just to make sure it's, it's backed by continual projects, I guess, like a lot of stuff in the pipeline in terms of those infrastructure projects, both public and private spending. And that's where you really want to chase. Where you've got both of those coming in, then there's something good on the cards.
Yeah, fantastic. Can I ask as well, as if I can imagine with, the sort of the clients that you're dealing with on a day-to-day basis, I mean, what is the perspective range of these people? Are these people first home buyers or first-time buyers, I should say? Or are these people sort of high net wealth? Where does it sort of bracket, or are you sort of suiting all cases?
Yeah, pretty much suiting all cases. Look, people come in many different shapes and sizes. I've got people who are first-time investors that literally have a budget of 150 grand. And then I've got people who've got a portfolio of 10, 20 properties, and all they want to do is, they're a very different case typically. They normally want to come in and they're at the back end of their portfolio. They want to add like something like a high cash flow deal, or they want to add a chunk deal or something into the portfolio and just let me manage that process. But honestly, it's everyone coming from all walks of life at all different stages of their portfolio. You might just have mum and dad investors. They just want to buy something that ticks over, neutrally geared with really good growth prospects. but then you may have the first time investor that comes in, they've only got 150, 200 grand to spend. And they're like, look, I can't afford anything that costs me anything. I need this to generate me a bit of an income. So we'll go out and we'll source him something below market with the positive cash flow. So then what they can do is, say 6 months down the track, they can refi out that equity that we've made on the way in with the purchase, pull that out, roll it into another deal. And that's essentially how you can keep moving in this sort of process. And if you're buying them in the good areas as well that have those growth potentials, you make your money on the way in, and then 6 months down the track, you should have growth on top of that as well. So that's the icing on the cake.
Yeah, I agree with you. So, I mean, by the sounds of things, I'm painting a picture here in my mind listening to you. And the way I'm sort of seeing it is, it feels quite long-term, your strategy. I don't mean necessarily that the purchase decision itself, but obviously when you interact with your clients, it's very much, this isn't just a one-stop shop. It's very much like, if we do this, we're going to be able to achieve this in 3 years, 5 years, 10 years. This is where we should be at. Am I getting that right? Is that the sense of well-being that you're sort of trying to attain here?
Yeah, definitely. We always project what we can. Well, typically, firstly, we look at the back end, what someone actually wants out of the portfolio, in what sort of time frame. That really, you just work back from that, and it paints a pretty direct picture with what you need to do and what you need to accumulate on the way through to hit those sort of goals. And everyone's different. Everyone's time frame is different. Everyone's income levels are different, and goals are different as well.
Yeah, definitely. Can I ask as well? I mean, of course I can. I'm the host.
Here we go.
How many properties do you have in your own personal portfolio?
So I've just purchased my 19th, and I'm in the process of getting my 20th.
Yeah, right. That's absolutely incredible. How old are you again?
I'm 29.
Jesus Christ.
End of the month, I'm 30, and I had the goal of 20 in my 20s. So I'm just I'm almost there. I've got that last one ticking over. I'm just trying to get it done. Not many real estate agents are operating too much, so trying to get this thing locked down.
No, mate, well done. No, seriously, that's quite impressive.
Thank you, mate. I appreciate that.
I suppose that's sort of because everyone's always in a different boat. I myself, I'm hearing stories. I've quite literally just heard it around the Christmas table. I'm not sure if anyone else is listening, but they're probably going to agree with me in terms of what I was saying. But I've been sitting there with family, and it's like, oh, we should go and invest in this area. Mum's spouting off about going and investing in Perth for many different reasons, of course. I mean, what do you think is going to be the typical mistakes people are going to be seeing, or what do you think people are going to be hearing, in the market currently? Give us your top 3 mistakes that you think people might be making.
I think what everyone has to be really careful of this year, we've already seen it because there's a lot of first-home buyers getting out there active in the market, right? Typically, investors and first-home buyers compete for the same properties, right? And at the moment, that new first-home loan deposit scheme that's come out, that is playing an active role in that lower end market. And we're already seeing it. We're halfway through Jan, and we're literally already seeing this as well. It's an interesting sort of thing because it's kind of changed the dynamic of the market. There's a lot of people that never really had the opportunity to kind of get into the market. We're going to have to save their 10%, 20% deposit. A lot of people don't like the idea of LMI, and it's changed the game because so many people can now get in with that 5% deposit. What I would say to be careful of, probably the biggest mistake people could make is they're going to pay too much because they get that fear of missing out. You got to remember, there's only 10,000 of these things. Be patient. Do not pay too much for something that, unless you're 100% sure of what that thing's worth, don't buy it, because it happened in Sydney when Sydney took off and when Melbourne took off. Everyone was going crazy trying to buy these things because they could see the market moving so quickly. This is constrained. There's only a certain number of these on the table, so don't get caught up in the hype or that real quick sting of everyone trying to buy everything, because there is a rush and it will run out pretty quick. That's probably my biggest tip. Don't get caught with that.
Okay, no, mate, it's sound counsel. I can tell you that, mate, because I agree with you wholeheartedly. It's treading that fine line, isn't it? About take your time, don't rush, but at the same time, don't make an emotional decision, but you need to have a punt.
Yeah, definitely. 100%. Oh, mate, still get in the market, definitely. But just know the market. Yeah. Make sure you're not just paying an overinflated price for a certain time of the year. That's all I'm I'm trying to get at with that.
Absolutely. Well, I suppose that, coming further, I mean, you made a good sort of caveat to that point. What do you think some of the good investors, whatever that term really means, what are the good investors doing right now, do you think?
Taking everything into stock, like being very, I guess, clinical with a decision, not getting swayed by the emotion of a market moving, if it is. Looking for the little value adds as well. That's probably my biggest thing. That's what I always look for in a property. What's the little twist can I add to this thing, or what is available on this sort of property that you can add a bit of value to? Because growth is never 100% guaranteed. So that's why we always go out there to buy below market to force a little bit of value on top. So always making a bit of fat in the deal on the way in. And I think that's super important. I think that's what the smart people are still doing. And honestly, the way to do it is having those, a lot of the times, just having those agent connections, getting stuff before it hits a market, because a lot of the time the homeowners that are putting things on in the new year, they don't know how quick the market is actually moving. And the flow-on effect isn't quite there yet either. So it's being smart, getting those connections where you can, and that's what we're doing. Just picking those things up still at the best price we can, and we'll ride this little bit of a wave. I'm not just taking advantage of it.
Yeah, absolutely. Well, mate, again, a bit more sage counsel there. And speaking of value add, I think it's time we hear that offer, mate.
Look, for the month of Jan, I'm feeling generous, mate. It's my birthday month. the big 3-0. Didn't want to hit it, but whatever, it all comes around. Look, mate, we're willing to do a portfolio review, a free portfolio review for anyone that kind of contacts us in the month of Jan. I'd really love to sit down with people, or get them on the phone, whatever we need to do, and have a portfolio review to make sure people know what they're doing going forward. 2020, it's another year like any other year, mate. You need to be strategic with moving forward. You want to accumulate hard, you need to know what you're doing. And look, I think I can come from experience with what I've done myself and what I've been able to help clients to do, that I think I can give that counsel and help people in that regard. So yeah, mate, look, that's the offer for the month of Jan. Also, the first 5 people that get in touch, they have that portfolio review and want to, kind of move, or make a decision to have a good year, to get started on the right foot. We're offering 10% off our full fee, buyer's agency fee as well. So,
Jesus.
Well, yeah.
There you go, mate. I think I might actually be number 1. So.
Here we go. Sorry, guys. There's only 9 of those left. Sorry, 4 of those left. What am I doing? I'm offering too much.
Fantastic. Look, to everyone listening, if you want to get in touch with Sam, you can find him plastered all over the Smart Property Investment website. As I said, you can see him on articles. We'll also include a link within the description of this podcast too. But Sam, how else can people get in touch with you?
Yeah, mate. So on both Facebook and Instagram, if you want to follow me on the socials there, it's just Australian Property Scout. And then also you can find me www.australianpropertyscout.com.au. And there's a little booking form there if you want to book in for a call, or just, you can send in the emails as well. That's the easiest way to get in touch. And yeah, guys, please feel free, reach out and let's have a chat.
Fantastic. All right. Until then, next time, guys.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.